To the cloud. Recording this week's live training for restaurant owners on accounting and finance for your independent restaurant. Let me share my screen and we'll get into this week's topic. And so this week's topic is mastering your restaurant's profit and cash flow to build the stability of your restaurant. And just as a means of an introduction, if you've never been with us on a weekly basis, join us weekly for live trainings on Facebook every Wednesday morning at 9:30 a.m. Central Time. We explore essential financial management topics for restaurant owners through concise 10 to 40-minute sessions. Practical insights on bookkeeping, accounting, and finance with occasional expert guests to help your restaurants thrive financially. However, for September, we will only be on September 3rd and September 10th. I'll be out the second half of September, but we will resume with the first Wednesday of October. So let's get into this week's topic. Understanding profits, mastering your profits and cash flow to increase the stability of your restaurant. And it starts by understanding the difference between your P&L profit and actual cash flow. So cash flow is comprehensive financial management. It's vital to restaurant stability, but it isn't the same as profit. Measurement methods, profits appear on the income statement. Cash flow is measured through changes in balance sheet accounts. And there's actually a third financial statement called the statement of cash flows. It's sometimes hard for non-accounting people to understand. And it is a topic that we do cover in another training, a previous training, and we will cover it again in the future. But for purposes of today, just understand that the profit and loss statement, cash flow, profit is not the same as cash flow. Positive cash flow, however, requires healthy profits. All financial stability starts with consistent profitability, which is why that's what we focus the most on with our independently owned restaurant owners when we work with them on an ongoing basis with accounting and finance. We focus on managing the profitability of the income statement, otherwise known as the profit and loss statement. There are two pillars to financial stability. The foundations for mastering profits and cash flow are found in two of many core concepts of comprehensive restaurant financial management. But the two pillars for improving profits and managing cash flow are having the proper systems in place to correctly measure the right things so that you can pull the right levers in your restaurant, and then budget management, creating a budget, which in my view is a little bit of a derogatory term. Think of it more as your master financial plan for your restaurant. That's what the budget is. Optimizing your accounting systems. You want to track critical categories, monitor sales and cost of goods sold by category, separate back of house and front of house labor, track direct operating expenses, and then overhead expenses, which are mostly fixed costs. Implement a detailed chart of accounts, which we're going to look at here in a second. Go beyond the basic GAAP, generally accepted accounting principles, those requirements that your CPA wants to make sure you have, or generally following those so they can prepare a tax return. We want to go beyond that and create a detailed categorized chart of accounts to drive meaningful analytics and KPIs, key performance indicators. We want to use accrual accounting. So recording expenses when they occur, not when they're paid. We want to record your inventory as it comes in, not necessarily when you pay that bill. We want to ensure labor periods are recorded correctly. If you're paying your team every 2 weeks, then there are actually 26 pay periods in the year. So there are 2 months that 3 pay periods land in. Well, we want to use accrual accounting to properly measure payroll so that, for instance, in the month of September, there's probably 26 days you're open, depending on when you're open and closed. One day a week you're closed. There should be 26 days in September that you're open. We want to make sure we're tracking 26 days of payroll, not just 2 pay periods or possibly 3 pay periods if that's what lands in the month of September. So we use accrual accounting, monthly accrual adjustments to make sure we're matching actual expenses for the month against actual revenue generated that month. Then you also want to align your point of sale system with the accounting to configure your point of sale system to match your chart of accounts for seamless data flow. Let's pull over a sample chart of accounts and take a quick look at. This is basically the format that we follow for most of our restaurants. We're tracking income categorically by food, wine, liquor, beer, bottle and draft if you want to break it out, non-alcoholic bev, and merchandise if you're actually selling any merchandise in your restaurant. Likewise, we want to track your cost of goods sold by those categories: food, wine, liquor, beer, NA, bev, and merchandise, so that you can compare actual food costs to food revenue and determine what is your gross profit on food and what is your gross profit on wine, liquor, each of the beers, and NA, bev on down the line, so that you understand what profit margins you're hitting in each of those categories so that you can pull the right levers to improve those profit margins. And then back of house and front of house, we're breaking out those different roles within your restaurant so that we can detailed track whether or not the expense level in each of those roles in the back of the house and the front of the house is appropriate for your revenue levels. And then restaurant wages for owners, and then of course payroll taxes and benefits. That generates what's considered your gross profit, your revenue minus the specific cost of food, beer, wine, liquor, and the labor incurred to put the product on the table and take care of your customers. Below that are your operating expenses, and the first category that we put up there is direct operating expenses. And those are the expenses that you actually can influence on a month-to-month basis: glassware, smallwares, linens, so forth and so on. And then below that, we get into more of the admin expenses and some fixed expenses. Rent, you cannot necessarily influence on a month-to-month basis. It's fixed, probably on a 3-year lease. It doesn't change from one month to the next, unless you're on a percentage rent. Utilities, it's pretty hard to influence those, so forth and so on. So that's a detailed chart of accounts to match your restaurant so that you can track the right metrics and the right key performance indicators. All right, creating your operating budget, the number one tool for you to enhance profits in your restaurant. Consider it your financial plan for the coming 12 months. You want to define success as you see it in your restaurant based on your restaurant's unique conditions. Consider your core values, your style, your price points, your location. All those matter. You don't want to just go by industry averages. You want to define success according to your restaurant in your terms and your core values. Choose your tools, select a budgeting software that works for you. Options might include the actual budgeting tool inside of QuickBooks Online. You can use Excel or Google Sheets, although one wrong cell in the spreadsheet can cause the whole thing to go wrong. We use a budgeting tool called Fathom, a software tool called Fathom that syncs directly with QuickBooks Online, something you might want to consider. Build your template. Start with historical data. If you don't have your proper chart of accounts, which we talked about here, if that's not implemented yet, use your point of sale for sales mix analysis so that you can understand of your total sales, how much is food, how much is wine, liquor, beer, so forth. Track the cost metrics appropriately and incorporate payroll data. Let's get into some more detail on that. So it's a detailed 12-month operating budget. You always want to be rolling the budget over from one month to the next and looking out 12 months. So you create your plan by reviewing the previous 12 months P&L. Hopefully that's tracking along a chart of accounts that makes sense for your restaurant. Then you project out the next 12 months, always starting with sales. How do you plan to improve your revenue and top line revenue? Then you can identify the areas of your restaurant that need to be improved. Are your food costs at 35% and they really probably should be closer to 30%? How are we going to improve that? We have several tools that we go over in the training here every week to improve food costs, to improve um, beer, wine, liquor costs, and improve payroll expenses, front of house, back of house. What improvements are you going to build in over the next 12 months, and how are you going to phase them in, and how are you going to accomplish those improvements? Create an actionable plan. Then start to understand what your variable expenses are and the nuances behind those. Your number one variable expenses are your prime costs: food, beer, wine, liquor, beverage, and of course, front of house and back of house payroll. Your direct operating expenses, which we talked about, are those expenses, overhead expenses that you can influence and have an impact on a month-to-month basis, and any other variable expenses that fluctuate with the sales, to start to build out that detailed budget line by line according to your P&L or your chart of accounts for the next 12 months. And then, of course, you have your fixed expenses that you pretty much static every month, your standard rent payments, insurance, telecom, so forth and so on. So you build out that 12-month operating budget. It becomes your vision of prosperity. It becomes your vision into what you can do over the next 12 months to improve your bottom line profit and hence improve your cash flow of your restaurant and improve the long-term financial stability of your restaurant. So it's a continuous budgeted monitoring system. You compare actual performance against the budget every month, analyze and investigate the variances to understand the root causes as to why you're not hitting your plan, what needs to be done to shore up the actual results to get closer to your plan. Or there's always the option that maybe the plan was too pie in the sky and not realistic enough. And maybe you thought that you can build in those improvements sooner than you actually can. Well, let's adjust the plan so that we have a true vision of where we should be on track month over month. You adapt, modify operations and budgets based on your findings, and then you continue the cycle for ongoing improvement to continually improve your restaurant's profitability and continually hold yourself to a standard that you know you can achieve, and also incorporate your team into this process. It also becomes a motivating tool for your team so that they can start to see improvements, and maybe you build in some compensation plans according to improvements to share that profitability. Compensation planning is another topic that we discuss here in the weekly trainings. So what are the key steps to financial mastery? Just in summary: grasp the fundamentals, clearly understand the distinction between profits and cash flow, optimize your accounting systems, make sure your systems are set up and aligned with your point of sale so that you're tracking your key metrics and your key performance indicators, and understand where your restaurant is according to where you want it to be. Craft your budget, develop that realistic 12-month operating budget, build in improvements to improve profits, and then monitor and adapt in that continuing ongoing circle that we just looked at. So every week, join our financial management community, 45 annual sessions at least here on Facebook every week at 9:30 in the morning on Wednesday, 10 to 40 minutes per session, 100% restaurant focused, content tailored to your industry and to help you manage the financial success of your restaurant. Tune in every morning at 9:30. Replays are available the following Friday. So tune in every Wednesday at 9:30. Replays are available the following Friday. What's your next step? Book a profit and cash flow analysis meeting. We'll examine your current restaurants. By the way, I love talking to restaurant owners. Even if there isn't a good fit for you to continue to work with us on an ongoing basis with your accounting and financial management, I just love talking to restaurant owners. Set up a meeting. We'll identify your biggest opportunities, map a possible path to more profit. Most restaurants can find $25,000 to $100,000 of hidden gains. If you're an independently full service restaurant running at least $1 million to $1.5 million in annual revenues, you can find those kind of gains to your bottom line profit. So drop a comment below or click the calendar link that I'll leave below. Let's talk about what's possible for your restaurant. That's it for this week, and we'll see you next week with another training. Have a great week.